Now we have with us Bhawan Litt. He is a mortgage broker and they have been in Nova Scotia for 14 years, as Sharon explained. So Bhawan, yeah, please tell me a little bit about yourself.
So yeah, I've been, as you said, like we've been living here for 14 years
Yeah.
already, right? So working in a community for a long time. I've been doing mortgages for almost 3 years now. Yeah,
Okay.
and work with the mortgage group. It's well-known, biggest, almost I would say, one of the biggest mortgage brokerages in Canada.
Okay. I think mortgage is a thing that isn't on everybody's mind because the rate of interest have been so fluctuating. Bank of Canada has been increasing them, holding them. So could you please tell me who can be eligible for the mortgage?
Well, anybody, basically all the permanent residents and Canadian citizens definitely can buy the houses. Whereas the people on a work permit with a minimum of 6 months plus 1 day on their work permit can buy the house.
So now we have seen there's a big influx of immigrants coming to Atlantic Canada. What is one of the most important thing one should do when they arrive in Canada?
When you arrive in Canada, the most important thing for the mortgages is like you have to think ahead, I would say, a few years ahead, because whoever comes there, right, one day you will be buying a car, you will be buying a house, right?
Yeah.
You need to make sure that you build up your credit history.
Okay.
Right? Credit history is very, very important. A lot of people don't get a credit card because we are not used to credit cards in India, right? So it is a must. You should have a credit card, and if a couple comes to Canada, husband and wife, you need to have your own credit cards in your own names. Instead of like having one primary and one secondary, don't do that. Just have your own credit cards, and regardless you use it or not, right? I would say like use it at least once a month, small purchase, and pay it off. Another thing is you need to have a good credit score.
Okay.
One thing is very, very important is what is your utilization. So utilization is how much you utilize the credit that is available. So for example, if it's 1,000, if you are spending like $800, $900, which means that you are utilizing your credit 80-90%. So try to keep it under 50 to 60%. I would say good to keep about 50 and then just pay it off and then use more. Once you have more limit on the credit card, like for example 5,000, 6,000, then go 50% of that, right? Yeah.
But building your credit score is very important in Canada. I think everything works on credit here. It's a credit country. So if you want to buy a car, as Pawan said, a house, anything, they will check your credit history. Even to get an internet connection or to get a water connection, everybody checks your credit history. So building your credit history is very important.
Just in addition to that, when somebody comes new to Canada, right? So usually banks want to see how good you are in paying your liabilities, right?
Exactly.
Fixed liabilities are like your rental cost, right? Your phone bills, your internet bill, your power bill. So it's good to have like you can have a joint lease, right? And then one of the person from in the couple is paying that every month, whereas it's good to have your internet connection in common name as well, like both names, right? You should have your own phones, like phone lines under your own names, right? Regardless where the money is coming from, but it should have at least your own names on the phone lines.
So it just shows that each person is building their own history, because both partners need a good credit history to buy a house.
Yeah.
Okay. Now, how can a mortgage broker help someone new to this country in the process of buying a house? How can a mortgage broker help them?
So, like mortgage brokers don't work specifically for one single bank, right? The thing is, like if you go on a street and go to any branch, any bank, right? So they will only give you a product for their own bank, right? With the mortgage brokers, we have access to more than 50 lenders, right? So we work with the A lenders, the alternate lenders, and the private side as well. So we look at what is the financial needs of a person and what product will suit them and what are the best rates available. Usually the best rates available are not with the Schedule A banks, like the main banks that you see, but they are with the different institutes, like for example, Manulife, and then there are a few more like First National, right? Home Trust, Strive. There are many lenders available.
So like as Bhawan said, these are like called secondary lenders. I think the banks, their primary business is not mortgage. They are more involved into banking. But these secondary lenders are basically only into mortgage. So that's why you can get a better rate with these.
Yeah.
What is a B lenders? Or
they are not B lenders. No. They are all A lenders. Like it is a very common misunderstanding with in the people, right? So the lender is not a lender or a B lender. Lender, it's a lending, right? So, for example, I can give you multiple examples. For example, Equitable Bank, right? So they do A lending and B lending, right? Same thing, Home Trust does A lending and B lending. First National does A lending and B lending. So it's a type of lending.
Lending, not a lender.
Yes, yes. And when it is the A lending, it just means that you are playing with the same rules that our other banks are playing. Okay. Right. Yeah.
And with your mortgage company, your brokerage, how many banks or how many these institutions you can compare the rates for a client?
I can go like more than 50 lenders. Yeah.
So more than 50 lenders, so you are sure to get a better rate for the client.
Yeah, I have access to the main Schedule A banks and just the mortgage companies, the ones that do A lending, just the mortgages. Also credit unions.
Right.
Yeah.
And now this, I think a lot of people have this misconception, like they say mortgage broker or mortgage agent, you don't pay them. The lending bank pays the mortgage broker.
When it is A lending, the regular lending, then yes, banks pay the finder's fee. That's what it's called in the mortgage industry, right? So it's the banks that pay the fee to the mortgage brokers. Whereas when it's a B lending, then banks charge fee on top of the mortgage to the borrower.
Okay.
So from that fee, the mortgage brokers are paid. Yeah.
How soon can somebody buy a property after landing in Canada?
Well, as I mentioned earlier, right? So you need to build up your credit. That is very important. If you don't have a credit outside of Canada, right? So you need at least one year, right?
Credit history.
Before you can buy a house. But if you have credit cards in India, for example, right, and you come here, you start working. For example, these days we have nurses, right, who come here like within 2-3 months, they get a license, right, and they start practicing. So I would say like if you come here within 3 months, you're working as a nurse, right, and then we can get you the mortgage within very, very short time.
Okay.
But as long as you have some credit history built up in India, or for example in US as well, like in India, the credit company is called CIBIL, and what we need is it's very easy process. You can go on their website, get the CIBIL report, right, and we can submit to the banks, and banks accept that. It's called International Credit Report. So
I didn't know about that.
Yeah, and CIBIL is actually owned by TransUnion, or it says the company is by TransUnion.
Okay.
So yeah, and TransUnion is one of the credit companies in Canada.
So your good credit history from India can be transferred over to Canada.
Yes.
Okay.
Same thing. There are a lot of people who comes from in the IT industry gets transferred from US to Canada. All we need is if it is internal transfer, you're not changing a job. You're already working on that same job for many years, right? And then you have a credit history in US. We can get a credit report from US and get your mortgage, I would say, like within 1 month of job over here.
Okay.
Yeah.
That's I didn't know about the credit history transfer from India. That's good to know. Now, Sharan has touched upon a pre-approval, which is a very important factor before you even start your real estate search. What is pre-approval?
Pre-approval is basically like we look at your job documents, right? For example, your pay stub, how much you are making, right? And one person or a couple, or whoever is going on the mortgage, right? And look at all the liabilities that you have.
Okay.
For example, if there is a car loan or anything, what is the payments, right, on that? And basically looking at all the servicing ratios, right? Debt servicing ratios, and see how much maximum amount you can borrow from according to your incomes.
Okay.
Yeah. So we submit that income information to bank, and bank look at that, and they can issue a pre-approval. Just one thing, pre-approval is not something that you buy a house with.
No.
It just gives you a satisfaction or gives you a confirmation that you can go up to
that amount.
When you have a accepted offer, at that time we have to apply again.
And how long this pre-approval stays? How many days?
120 days. So bank can bank holds the rate for you for 4 months, 120 days, and within 120 days you have to close the house.
Okay.
Yeah.
And after that you have to apply again for a pre-approval.
Yes.
Okay.
Once you have accepted offer, so we have to apply for the mortgage. So this is a real process that starts when you have accepted offer.
So the pre-approval doesn't mean that you are approved for the mortgage. It just
no.
gives you a starting point.
Yes.
Okay.
Yes. So when you have accepted offer, so we submit the exact same information, but now we attach the property details.
Okay.
Right. So which property you're buying, what is the square footage of the house, right? How many rooms and all that, right? Associated information with that.
Okay.
How old is a property? So because bank need to use that information to value the property, right? Bank when they give you a mortgage, they want to make sure, because they are risking.
Right.
Yeah. They want to make sure that the property that you're buying, let's say it's a $400,000 house, right? It is actually valued at $400,000, right?
In your experience for the last 3 years, have you seen a property that is like, what do you say, the word unmortgageable? Is there something like that, like a property cannot be given a mortgage on?
There could be some properties. Bank call it the useful life of the house, right? It doesn't mean that 100-year-old house cannot be mortgaged. It can definitely be, right? There are some properties that cannot be. Some banks has restrictions on the mini homes or trailer homes. Some banks may not give you a mortgage on just land. Right. So having a value on the property does definitely help.
So it depends on lender to lender what they are comfortable and their rules are.
Yes. So that's where we play a role, because we know which lender will accept which type of property.
So you don't have to go running around bank to bank or lender to lender. So you have one-stop shop for all your questions. Okay. Now we have talked about the cost and everything. I think Sharon touched on down payment. What is the minimum down payment that one has to put in for buying a house in, maybe say, Nova Scotia, I think, particularly?
I would say anywhere in Canada.
Okay.
Yeah, minimum down payment is 5%. You need to pay 5% down payment to buy a house, up to $500,000. If your house is more than $500,000, for example, it's a $600,000 house, right? So you pay 5% on the first $500,000, right, which is $25,000, and then you pay 10% on the next
on the $100,000.
On $100,000 remaining, right? So in total, like, you are paying $35,000.
If it increases to $1 million, does the rule changes?
Yes, it stays 10% from 500,000 to 1 million, and then any portion that is above 1 million, that is 20%.
Oh, okay.
Yeah.
So if you're buying $1,020,000 house, you pay 5% until 500,000, and then 10% up to $1 million, and then 20% on the 20,000.
Yes.
So it just all adds up as a down payment.
Yeah.
Okay. So now we know that down payment is a big factor in buying a house, and that you have to accumulate over time before you even enter into the real estate market. So there has been some assistance provided from Nova Scotia for the first-time home buyers. So Bhawan, what is the first-time home buyer down payment assistance program we have heard about?
First-time home buyer assistance program, right? It's called So what it is Nova Scotia government can give you 5% down payment loan for 10 years without interest.
5% down payment loan for 10 years?
Yes, without interest.
Okay, and that depends on the property value. 5% up to what property value?
Up to 500,000.
Okay, up to 500,000.
Yeah.
Without no interest.
No interest.
So how do you repay? Like, do you repayment start after 5 years, or does it start immediately?
Your repayment starts right away after you get a closing. Within 1 month, you will start paying installment to the Nova Scotia government, and you will also pay the installment to your bank.
So to apply for this program, will the mortgage agent help us, or do I have to go through a separate route to apply for this?
I can guide you, right? I cannot apply, like mortgage brokers cannot apply, or real estate agents cannot apply on your behalf. You have to apply on your own. But it is a very, very simple process. A lot of my clients were able to get the approval within 1 or 2 days, right? So you just fill a form, get all the documents ready. You can only do that once you have approval of the mortgage. So you get that approval letter, and then you file the application, and then just take it to the office.
And you can do it only one time in your whole home buying history,
yes,
right?
Yes.
Another question, like a lot of friends who are coming from India, who doesn't have a family here, and they don't have enough income to buy a house. So can they buy a house with their friend, like a co-signer, like two people not from the same family can buy a house together?
Certainly, like two friends can buy it. We have examples of some of my clients were like two friends went together on the mortgage because one of them alone cannot qualify on their own. So two of them did it. There's one mortgage I did where 3 clients were able to do it together, right?
So, but there's a legal document that shows that all 3 are owner of that property.
Yes. All 3 will be owner, or all 2 will be owner, right? So it can be siblings, it can be a couple, it can be friends, regardless. One more thing I want to add is if the house that somebody is buying, and there is a second unit in the house, we can use the rental income of that unit to add up in your income.
So like if you buy a split and like a duplex.
Yes.
So if you're living on one side, you rent the other, you can show the income from the other as your rental income from the other unit to buy this unit.
Yes. So the rental income from the second unit does add up in your income. So you can actually qualify for more. For example, if somebody is qualified for 400,000, right? If there is a 2 unit that he's buying, and now we have to run the numbers, but depending on the income of the rental, right? That is coming in. So we may be able to go up to 450 or 470, right? It depends on how much rent is coming in.
This has been great information from Bhawan on mortgage rates, how a mortgage broker can help you through your whole process, and Sharon has explained the real estate side of the home purchase. Question to both of you, whoever can answer. In this environment where we have high house prices and high interest rate, like we have just seen, the interest rate are still 5% prime, so you're getting 7.2% from a bank. Should people wait to buy a house, or they should buy it now? Or is it like, I know nobody has a crystal ball to see, but like, should they wait for a opportunity, or should they buy now?
Well, it's a very good question, right? So in the real estate, I would say it is not a bad time. It is a very good time to buy a property, because right now a lot of people are not able to qualify for the mortgage, right? So there are less number of buyers. Some buyers have stepped away because the interest rates are higher, thinking that interest rates will go down, and then at that time they will go in. But imagine, when interest rates are going down, everybody's income is going to go up, or their purchasing power goes up,
and the pent-up demand will come into play, right?
So there is an inversely proportional relationship between interest rates and house prices. As like, if the interest rates are higher, house prices are lower right now. They have like subsidized a little bit in last 6 months, right? And then as soon as we see the interest rate starts going down, the house prices will start going up. So good thing is, yes, right now you will have higher interest rate, but maybe for a shorter period. But you will hold a lesser principal compared to when the interest rate goes down.
That's a very important thing. So there's you can't time the market. It's very hard and very risky to time a real estate market. So as Bhawan said, you should buy it when you need the house to buy. When you need it, you should buy it. So I hope you'll find this video very helpful to take your journey in real estate market, and what are the steps you need to do before you even enter the market. And then obviously having a real estate agent and having a mortgage broker is a must. I would really recommend that to make your life easy, not fall into any pitfalls. So I thank Bhawan Litt and Sharon Litt for joining us today. And their information will be in the description box. I will also link all their social media channels, everything, and you can contact them for all your real estate needs. So I end this video with this good note, and then hope you have a good real estate buying experience. Thank you very much. Don't forget to like, share, subscribe. I'll see you in the next video. Bye-bye.
Thank you. Take care. Bye.